Now, for more analysis on exactly what this could mean for Apple as a company and just basically the smartphone space over there and what could be the world's biggest market for smartphones, let's speak to Mark Newman from the financial research company Sanford Bernstein. He is also at CNN Hong Kong as well. Great to have you on the show as well, just to give us the financial dynamics of this. Mark, how big a deal is this for Apple?
Well, I think what's key, the potential is massive because China Mobile is a massive operator, 700 million subscribers, as you mentioned. But what's key is going to be the price point. The majority of Chinese handset purchasers, users, cannot afford the typical iPhone 5S price point, $600–700 US. And even the iPhone 5C, as it's currently priced, is only about $100 cheaper. So it's still at a price point that's too high for the great majority of consumers in China, and so the price point will be critical. At a more aggressive price point, it could encourage cannibalization. In other words, people, rather than buying a high-end phone, they go and buy the cheaper phone. So Apple, I think, is going to be fairly conservative and is not going to go for a very, very low-end price. But if they did go for a more aggressive price, say a sub-$300 price point, then it could be more significant for them in terms of market share and could be more impactful, have more impact on Samsung and the other local Chinese brands as well.
And Mark, this is an ideal example of how a company just can't afford not to be in China, even if it means totally revisiting its pricing strategy and its product offering. Investors want to see it present here.
Absolutely. So that's why there's this big question mark. And for the last year, really, there's been a lot of anticipation about what Apple is going to do in China once the 4G licenses are put out, and especially with China Mobile. There have been a lot of questions about that. And there was recently quite a bit of disappointment when the 5C price point came out, was still very, very high. And so, you know, there is some pressure on Apple to be more aggressive, but I think so far, they may make a change here, but so far the company has been quite conservative, sticking to their fairly high price point. So we'll see what they do with this new relationship here.
So if you had to sum things up, when you have a look at Apple's earnings statements 3 or 4 times a year, the percentage of sales that go to Asia isn't as big as it could potentially be. How much would you expect this to boost things by, number-wise?
Well, again, it really depends on the price point. If they stick with this high price point, then I think the impact is quite small. Maybe 5%, 10% on unit side. It's not going to be that massive. Sure, it will make an impact, but it's not going to be a massive game changer for the company. And most of that is already in most analysts' numbers. But again, if they were more aggressive, then there could be much more upside. I mean, Samsung market share in China is substantially higher than Apple because they have a wide range of price points, all the way from the low end to the very, very high end of the market, and that enables them to be the biggest market share by far in China and in most regions except US, frankly.
All right. Mark Newman, thanks so much for joining us there from the financial research company Sanford Bernstein.
Thanks.
It's been great to get your views there, and also that pricing issue.